everyone. Welcome back to the Rational Investor. So, what a great week for the markets. I'm going to talk a little bit about real estate. I'm going to talk a little about the stock market, and we're going to get into a little about what the Fed said and Jerome Powell. So, stick around for the video. I'm really excited how the week went. Good afternoon. So today is Friday, December 15th. My God, I can't believe how quickly the year's gone. Before I get into the markets and the Fed announcement and everything else, do me a favor. If you haven't already, hit the subscribe button, hit the like button. I really appreciate that. It helps YouTube's algorithm find me, and it helps if you like the content, it helps other people find me as well, which I really appreciate. I enjoy doing this. I think it's kind of cool. I get to talk about markets, which I love, and you know, I get some comments from people and we talk back and forth, which is fun for me. Really, if you disagree, by all means, make the comments. I got no issue with that, and I'm happy to go back and forth. And if somebody makes good points, you might help me see a different perspective. On top of that, I'm going to put a link in the description on how to open an account at SoFi. Not only do I have an account with them as well, I own some stock in it. I think it's a great company. The account that I opened with my 13-year-old son because I try to teach him about saving and investing and all the things we talk about on the channel as well. So stick around. I'm going to talk about what the Fed said, how it's going to impact the markets, and what I think. So if you didn't watch the Fed announcement, Jerome Powell couldn't have been better about what he thought about the economy. I'm super excited. Essentially he said inflation is slowing, the economy still looks strong, GDP is good, unemployment hasn't gotten out of hand, which is everything you would hope for. And the stock market took off, the bond market took off, which means lower yields. Like higher prices in bonds means lower interest rates. The mortgage rates, which, so those of you who don't know and haven't watched the channel, I do mortgages as well. So the mortgage rates came down this week, and everything seems to be looking up. The biggest concern is people are getting too excited about a potential for a soft landing. But honestly, there's so many gloom and doomers out there, and it's a little bit of what I talk about a lot of the time, is I think we're likely to see a soft landing. And what I envision is when the yield curve finally uninverts and the doom and gloomers really go nuts about now the recession's coming, is they're going to be wrong. It's just one of those things that when everybody prepares for things one way, it's generally the other way around. And I understand the history of it, but the algorithms and the ability for the Federal Reserve and everybody else to prepare for the markets and understand things, their 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 systems in place are so much better than they used to be. I just don't see it being the same as every other time. I really don't. I think the economy is doing well, and including me, nobody likes that things cost more money. You can't afford all the things you used to before. But we've adjusted, which means the economy has slowed down, which was the Fed's goal. The CPI came in at 3.1, I think, and a year or so ago it was over 9%. Not only that, gas and oil prices have dropped dramatically, and that's going to take time to go through everything else. So when oil prices drop, it's not like your grocery bills are going to go down tomorrow. My guess is that takes 6 or 9 months of time before it like seeps into everything. Now, it might hit the gas pump in a week or two, but to be fair to the gas station, they have those tanks come when they come and they pay when they pay. So if they bought a week ago and prices haven't dropped quite yet, they don't lower their prices until the price of what they pay for the gas to fill those tanks lower. So sometimes things just take a little bit longer. Rents have for sure dropped. I can tell you that as somebody who owns a few properties. I had a tenant leave and I ended up lowering my rent 20% to get it rented out again. That's a huge discount from where it was. Now, maybe somebody still sees it high, but it's a little bit higher than it was prior to COVID. I think some things just got out of whack during COVID. And like I said, just like you, I don't like that things are expensive. I don't love that I go to look at U2 tickets at the Sphere because it'd be fun for my wife and I, and the tickets are $500 a piece. To me, that's just crazy. Now, that doesn't mean it's necessarily going lower. That just means it's expensive and life has changed a bit because they're still sold out for an awful long time. And those of you who think the housing is just so overpriced, I would equate it to the same way. I'm sorry, I get a lot of pushback that, when I make a comment like if eggs has doubled, there's no reason to think a house hasn't doubled. Where people push back and say how it's totally different because eggs are cheap. The reality is it's not totally different. And in some ways, the things that are inexpensive, it's even more difficult to take the increases because we use it every day. You have an option of buying a house or not buying a house, and maybe you have to buy less of a house. I'm sorry, it's the same as me not going to U2 or not doing this or not doing that. I mean, if you got into a home when the prices were lower, you're in a good position. But that doesn't mean prices now are going to collapse. I think the 5 or 10% pullback that we've seen recently is about what you're going to see. And not only that, if you're here in Las Vegas, now this is my opinion. You have to do your own research. Remember that. I'm just a guy on YouTube. You shouldn't listen to me or any of us for that matter. You really need to do your own research to make your own financial decisions and just use these channels as entertainment. Now, I'm super boring, so I don't know if it's entertaining or not, but I like markets and I think I have a good concept of what's going on. Now, maybe that's just my ego. Maybe I'm completely wrong, which is why I say by all means argue. Anyway, I don't really see the houses going down, and this time of year is traditionally slow. So what I think we have going on is some sellers that have been on the market a little bit longer than they expect, especially because the news not that long ago was talking about how heated the housing market is. So they're over optimistic of how quickly it's going to sell, how many buyers they're going to get. They list and they actually want to sell, and maybe it's not as busy as they think. I think those sellers get nervous and they might lower their price. And I think they might lower their price too low because they're a little bit nervous about the markets. And a buyer might get a really good opportunity because Jerome Powell, when he talked, discussed that they're going to cut rates and he estimated 3 times next year. Now, if you go to CME.com and look at their Fed Watch tools, they're estimating 5 times next year. And the bond market already moved from 5% for the 10-year to 4%. Also take into account now just a general guide. This is not exact and it fluctuates. But in the past, the average margin between a 10-year bond and where 30-year fixed mortgages was about 2%. When the Fed was raising rates and the economy was really nervous, that extended to 3% and even 3.5%. So now that the 10-year is back down to 4%, well, mortgage rates still seem to be running around 7% for a 30-year fix with good credit. That is not a quote on where mortgages are. By all means, go to bankofamerica.com, wellsfargo.com, any of the places, check where it is. That's just a ballpark estimate. Now, to be fair, if they get more comfortable that the Fed isn't going to continue to raise rates, I think it's reasonable to think that margin will come in as well. So if we see the 10-year drop down another half a point down to 3.5 and the margin comes in, I'd like to think by next summer we might see the rates back into the 5s. And what I think that does is that makes the buyers super comfortable to come back into the market and start looking for homes. Now, here in Las Vegas, the spring and summer are our busy season. If the rates are lower, I think the people might find themselves in the situation we did a year or two ago where they're having to outbid each other and there's a lot more competition, which is why I think in terms of the housing market, now is the right time to be looking to buy. Now, if I shift to the stock market a little bit, it had a huge week this week after they spoke. I mean, I can't believe how much things moved. I don't expect things to go straight up and up and up and up. But to be fair, at the end of the year and the beginning of the year, sometimes they have dramatic moves and then they bounce around a bunch. I wouldn't be surprised either way. I wouldn't be surprised to see a nice big pullback and then catch itself and go higher. Or I might not be surprised to see a follow through to the upside in the stocks and see equities really take off and then pull back and bounce around the rest of the year, kind of like they did in 2023. If those of you who remember December, January, February, the market took off. Made no sense to people. Everybody said it was crazy and whatever else. Well, this year it's kind of similar. The only difference is that I'm seeing is it's the bulk of the market this year. And last year it was Facebook, Amazon, Google. It was the, what do they call them? The Magnificent Seven that was really taking off. Well, the rest of the market wasn't quite doing the same. Well, if you look at this year, it's a little bit different where the Magnificent Seven hasn't taken off that way. I think they've already stretched pretty far. And as you've been watching the Dow start to take off, you're seeing all the underlying stuff that's been struggling, like Target going from 106 to 140, Best Buy going from the 60s to almost 80. One I talk about that nobody really watches was your Cracker Barrel, which has fallen into the 60s to be above 80. I see the bulk, like the other things, even Walgreens seem to have a move. And, I don't know that that's a company I want to own or not own. It just, I don't know. I don't really know what I see for the future. It pays a nice dividend. But that being said, all of those companies have really had some push to the upside, and the Googles and the Facebooks and the Amazons really haven't done a whole lot, which I find really interesting. I don't know if that rotation will push through the rest of the year. And again, this is just my opinion. You need to do your research, talk to your own financial advisor. I think the move that it's already has, I don't see so many bargains now. But to be fair, I made lots of comments and people was telling me how I was nuts that I saw a really lot of bargains and good deals a month ago. I think things are a little bit more fairly priced now. So it's not like I'm looking at, I can't wait to buy this or I can't wait to buy that, but I don't see any reason it couldn't follow through or pull back. I just think we had a great week. I'm very excited to see it, and I hope to see a good year next year. I think the media really prepared for a bad year. I think people are underinvested. Everybody got scared out of the markets and put their money into high yield stock, high yield savings accounts, CDs, treasuries, all of these safe investments that pay 5%. Well, I really think as that changes, if the Fed cuts rates and the interest comes down and those mature and people roll out of them, and now it's back down to 2%. Now, I'm just making up that number. And the stock market has gone up a good bit and is making new highs on the TV for the past 6 months or a year. That the people rolling out of those guaranteed things that they saw so great and hearing in the news that stocks are making new highs and the housing is going up and whatever else, might just want to put that money back to work. And maybe that's the wrong time. Like to me, when I get into a cab or if I walk into a high rise building and the doorman, if they start talking about Bitcoin or if they start talking about the stock market just going higher, or oh man, have you seen real estate going up? That's when I think everybody's a little too involved. Right now, if you talk to people, the comments are, oh, the economy's scary. I just don't see it going higher. As long as everybody's scared and they don't see it going higher, I think it's going to keep going higher. That's just me. That's what I think about the markets. That's kind of how I see everything. When everybody sees it one way, I try to do the opposite. Right now, everybody else is scared. Um, I don't want too much cash. I want to be in the markets. And I expect that the pullbacks are going to be pretty big because everybody's scared. So when there's a pullback, it's going to look scary before it catches itself and trickles up. But my guess is by the end of the year, it's higher than where it is now. Now, just my guess. You guys can make your guess. Have a great weekend. Like I said, it's Friday. I hope to get this posted today, but it might be tomorrow morning. Going to pick my son up at school and hopefully go out to dinner and hang out with the family. Again, like I said in the beginning, if you made it this far, do me a favor, say that in the comments. I'd be really excited to know somebody made it to the end. B, don't forget to subscribe. I really do appreciate it. I can't tell you how happy I am to see how well the channel is done. I mean, I must have done, I don't know, a few months and 6 months or something and had like 10 subscribers. I'm up to over 1,800, and it's really cool. I want to thank everybody for that. Like like I said, it's kind of fun for me. It gives me an outlet to talk about markets. If I try to talk to my wife, she doesn't want to hear this stuff. So I'm glad you guys do. So anyway, again, have a great weekend, and I'll talk to you tomorrow or Sunday.